U.S.-China trade talks now facing even higher stakes after Chinese regulators announced today that Nvidia violated one of its antitrust laws with its 2020 acquisition of Mellanox. Our Christina Partsinevelos has more on that in today's Tech Check. They're going back a ways on this one, KP.
Yeah, they are. So 5 years. Well, China's market regulator, like you said, announced this morning that Nvidia violated anti-monopoly law. But this isn't really about antitrust. It's about leverage. Beijing launched this probe, to your point, Carl, in December, just 1 week after Washington unveiled tougher chip export controls and conveniently announced the, quote, violation today as U.S.-China trade negotiations are meeting in Madrid this week. The alleged breach involves Nvidia's 2020 Mellanox acquisition, which was a deal China approved with conditions 5 years ago. So why act now? Pure posturing to gain negotiating power. Nvidia isn't commenting on this story just yet, but shares, as you can see, are down over 1.5%, and the selling pressure really extends across semiconductors. The SOX index rose about 4% last week on AI euphoria, but that rally may look vulnerable right now. China also launched an anti-dumping probe Saturday targeting U.S. analog chip suppliers like Texas Instruments, and that's why you can see its shares are down almost 3% right now. But for Nvidia investors, the bigger worry is that revenue upside hinges partially on China demand. The U.S. recently granted Nvidia licenses to sell their H20 AI chips into China, but shipments haven't started because Chinese cloud customers need Beijing's final approval. That approval is now clearly part of China's negotiating strategy. But the immediate financial impact may be limited. Nvidia already reported no H20 sales to China-based customers in the second quarter, saying those sales hadn't reached the country yet. Still, China knows the U.S. wants to keep them dependent on American AI compute, so they're aggressively pushing domestic manufacturers to avoid U.S. tech at all costs. This limits Nvidia's upside potential on revenues and earnings, so it's more of a possible long-term hit, Sarah.